Hey guys, how's it going? Another episode of 10-minute trades, and as promised, I'm going to be doing the S&P 500, and that is SPY. So let's just take a quick look because this, has just been crazy, right? From pre-illness to peak illness, we were at a low of under 220. We recently were at a high of just about 360, and in the past few trading days, we've been selling off. We currently closed today at right about 327 or so. So let's do some TA and see what in the world is going on here. So the first thing I noticed, and the first thing I wanted to do, if you've been watching my videos, is draw a fib line. So I drew it from the peak illness levels all the way down to the kind of worst case scenario during the illness. But then I thought, is that relevant? And should I do it from the bottom here to the top there? So that's actually what I did because I thought that would be more appropriate in terms of getting more accurate data. So let me delete this, and I'm going to draw Fibonacci retracements that go from the bottom here all the way to our recent all-time high, which is just about shy of 360. And we'll leave that right there to see what we see. And the first thing that jumps out at me is you can see this bottom of the candle from today. These are daily candles, so we actually did end up closing green in the SPY today. It bounced right off this 23.6% Fibonacci level. And the other thing to note is that the 23.6% level looks like it's an area of resistance back in end of July, and then is acting as an area of support once we broke past it July 31st into August 3rd. Even all the way back here in early June, it looked like it was an area of resistance where some of the candles got pretty close. So I think this is more accurate in terms of drawing the fib levels from the bottom, the recent lows, to the most recent all-time highs. But let's just hide this for now so the chart doesn't get cluttered. And the first thing I wanted to do was draw a trend line. So I draw this line here to try and incorporate the bottoms of these candles here, as you can see. And I didn't want to draw it more acutely like this because then it really wouldn't have pertained to some of the more other candles after the recent lows. So we'll snap it back to where it was. And as you can see, there are a few times in recent trading, going back a few months, where we bounced off this uptrending trend line. That was back in May 14th. We got close in mid-June, end of June, end of July. And most recently, this was critical, on about September 4th, we got close to testing both this trend line and also this orange line, which is a 21-day moving average. And what we really need to do was bounce off it and up. But unfortunately, we didn't do that, and we broke below it, which is a bearish sign. And now we've been trading between the 50-day moving average, which is the pink line, and the 21-day moving average, which is the orange line. And then, as you can see, the past few trading days from Friday and today, we also broke below the 50-day moving average, which is, again, not a good sign. Now, I also thought, would a channel be more appropriate than this trend line? So I also drew a channel if we want to hide this trend line. And we can see that it pretty much mirrors the trend line. If we incorporate, again, the bottoms of these candles, the tops of these candles, yes, we have a few times where we broke above the channel, but again, around the same time period, we broke out of that channel and now are on a downward trend. So let me just leave the trend line up as well, and I'll hide the channel just so it's less cluttered. But my next step was, where are the areas of support and resistance? So I started identifying trend lines, and the first one I saw was here, because that was the area of pre-illness highs around 338, 339, 340-ish. And so as we zoom out, you can see that was the all-time high pre-illness. But then also in recent times, you can see there are a few candles here in end of August that this trend line was acting as an area of resistance until it finally broke out above it on August 24th. And then again, recently, we broke below it. It was acting as resistance again. We broke above it, but then we couldn't stay above it when we broke back down. So I think right now, around 338 to 340 is an area of strong resistance right now compared to where we're trading right now at around 327. So let's keep going. I thought where we currently traded today, right around 327, was an area of support or resistance depending on how we trade tomorrow. Because if we zoom out, you can see in this area here back in end of July, there are three candles here, a fourth candle here where it acted as resistance. These candles here got fairly close to this trend line, but then also if I zoom out and go back in time, you can see pre-illness in the beginning to actually the end of January, it was also again acting as an area of resistance, and we finally broke out of it on February 4th. And also again in early January to late January, it was acting as an area of resistance, then support, resistance again, and then support. So I think 327, and it's interesting because we pretty much bounced right off it today. So I think tomorrow's going to be very important to see if we break back above it and trade between, let's say, 328 and 338, or if we bounce off it below it, which is not going to be a good sign, and I'll tell you why. And this is actually an area of resistance. But let's keep going, drawing some more trend lines here. So the next trend line that I identified is, I'm a little bit wishy-washy on this, but I think it's the low 320s, around 323. And I drew this because there was a recent peak here back in June 8th, 9th, and then June 10th, where we kind of tested this area of resistance. And there were a few candles here, kind of end of July, that kind of got close to it. And this line was acting as the area of support, then resistance, then support again. But also, again, if I zoom out, there were some candles here. Let me zoom in that area. Back in end of January, where it was acting as resistance for a little bit, and then acted as support. And then again, if I go back even earlier to early January, there was some resistance there as well. So I think currently, based on where we close right on this trend line, we're either going to trade between like 323 and 327 if we want to stay below this trend line and it's acting as resistance, or between 327 and 337 or 338 if we bounce above it tomorrow. So we'll have to wait and see what SPY does tomorrow. But let's keep moving on. So another trend line all the way down here that I noticed was around 300. And that's because it acted as support back in early to mid-June for a few candles, and then acted as resistance a little bit earlier than that, end of May. And again, if we zoom out, there are a few candles here all the way back in September, basically a year ago, where it was acting as an area of resistance. We finally broke above it in October of last year, and it was acting as support. So I think that is a significant trend line, but we have quite a ways to go before we get there. So let's keep going. I think there's another support level above it, right at 300. So these, you could maybe combine these the one trend line. They're only $2 worth apart, but I think there is an area of support somewhere around here between 298 and 300 or 301 or 302. And I drew this trend line again because if we zoom out and go back in time, back in September around here of last year, all the way back to like July, there were candles that got really close to this and tested this area, which was acting as resistance, as you can see here, 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 and then acted as support in end of October of last year. So I think somewhere between 298 to let's say 302, they may be two distinct areas of support, or there may be one kind of area of support. But we'll have to wait and see. Let's keep working though. I think there's another possible area of resistance up here around 332. And I say that because recently there's these few candles here on September 8th, 10th, and 11th, and then most recently on September 17th, where we kind of bounced off it. And then earlier in the year, in August, we bounced off it as well as an area of support. So I think there might be an area of resistance here currently. So we might actually be trading between 327 and 332 within $5 here, and not actually the $10 wide gap, like I said earlier, between 327 and let's say 337, 338. We'll have to wait and see. Now, the last trend line I noticed was right here. And that's because in recent months, back in July, we can see there's a whole bunch of candles here that bounced off this level at around 312. And then here, we broke above it in June. And then we bounced off this trend line back down. So it was resistance, then acted as support, and then resistance again here, and then support again. So based on where we're trading right now, I think we ended the day pretty much right on this trend line at 327. So I think we're either going to trade to the downside between, in the 320s essentially, between 323 and 327, or we're going to trade to the upside, depending on how tomorrow goes, between about 327 to let's say 332. So there's basically $5 of a trading range, in my opinion, up or down, depending on what happens tomorrow. But it's hard because a lot of this recent data is all-time high data, so there's not a lot of data in the past to correlate. but the data down here in the high 200s to low 300s, we can correlate if we zoom out to pre-illness levels. So we'll have to wait and see, but I personally think that we are potentially in a lot of trouble right now in terms of the S&P 500 if we continue this downtrend. Because I think if we break this 320 level here, the next stop is going to be 310. And I think if we break that, it's going to be 300. And we haven't seen those levels since about June. So we could, I think, fairly easily, if there was a strong enough catalyst, basically erase a couple months worth of gains in the S&P 500 if we keep selling off like we have been doing the past few days. So we'll have to wait and see. But that was my 10-minute trade analysis. I know we're a little bit overboard, but had a lot of information here that I want to share. So let me know if you'd agree or disagree. Personally, I am not opening any new positions. I'm not going long shares of stock, and I'm not opening any new options positions because honestly, I'm scared of this downtrend here. I haven't seen anything on the technical analysis right now that convinces me that we're going to bounce off a strong level of support and continue the bull rally. But we'll have to wait and see. I hope I'm wrong because I am bag holding some shares right now, but we'll see what happens. Let me know in the YouTube comments below if you agree or disagree with me. Smash that subscribe button, give me a like, join our Discord server if you're not in there already, and as always, happy trading.